Matron, take them away.
Okay guys, we're gonna have a trade. I've actually entered the market as we speak. I'll come into it in just a second. It's the CAD JPY as picked by the guys in the Discord group. Now let me just quickly show you what's going on, and I'll grab a quick coffee while I switch the screens over, because we all know Scruffy likes a coffee. And he needs it because it's early morning and I'm working hard. Now, in the morning watch that you'll have seen earlier on this morning, you'll have seen that I mentioned this trade. Now, it's not on the radar, but where it's come from is this. Let me just pull this down in for you. It came from here. And if I pull this up to weekly asset, it's there. So, little Perry there. We've all got the old little nicknames. CAD JPY is something he was interested in. I've already done a full breakdown for them, how I'm going to trade it, how I've marked it, and why I'm interested in it. Okay. Now, from here, I actually put it into a strength sheet. It's like an engine that I make. And from what I can see, we've got the CAD is down low and JP is high, but it hasn't moved position, and there's a little bit of movement on the CAD. Now, it's quite a difficult market to read, but when I look on this side, again, the bunch together. Now, this creates an area of low TP. What that means is they're probably going to move because they've got a half decent ATR of 131. It'll shift throughout the day, but keep it low. So the minimum is 15, and that might be a stretch on this today because we've got the dominant direction going against the deeper direction. Now, the deep trend is the very high time frames, your weeklies, your monthlies, etc. And then you've got your dominant direction, which is your trading time frames, your anchors. Now, for me, my anchor is the 1 hour, and it's telling me to buy this thing in and around that time. And it's also telling me the low time frames is up. That's why I'm monitoring it and looking to go to market with it. So what's this mean in grand scheme of things? Well, it just means be careful. So as we can see, it's here. What I'm going to do is I'm just going to leave this trade to run out, and then I'll come back to it and I'll show you the result. But I'm looking for a net 15 pips, which from that blue line to there is 15. So just click that onto there. You can see that's 15, making 75 quid. But I've also entered it here because it is surging to have a maximum up there. Now, what I'm actually going to do is I'm going to move that target up to there. But as soon as that's being clipped, I'll look to see how far the candle pushes through it, and I'll close it off and then let the other one run. Now, what I'm also prepared to do is buy this level, this level, this level, and this level down to this solid line. And either way, I'll get my net totals in here. I'll come back to you when the trade's finished. Okay guys, that's the job done. I'll tell you a little premise about what this was about. I can re-enter the market if I choose, but if I do, it'll be down here somewhere. I'll re-enter it, maybe it's here, there at a push. That's if I want to, but I'm not a big believer in sort of going back to market again and again. I prefer one-hit wonders and build your account up slowly. That's how I've survived over the years, and anybody who's watched me for a long time will see I'm actually quite defensive in my trading. It looks aggressive, but it's not. It's actually very defensive. Now, I'm getting out of this. Well, I could have got a little bit better, just shy of 15 pips. But I pulled it when it got to a certain level. In other words, it had gone through the 15 pips. Took off the bulk of the trade, pulled it to risk-free to see if it'll run that little bit further and give me a little bit of a bonus. It hasn't. It's come back and clipped me out. I shouldn't have any tickets left. I don't. Good, because I've already deleted them. I'm happy. All right. I'll go back to market. Maybe it's a little bit later this afternoon. Just to top off. But at the moment, this trade is complete. Now, it's taken maybe it's about an hour to do the 70 odd quid. So that's not bad. It's not a bad hourly rate if I want to work on that. But where's this come from? Well, this is the full markup of the chart. When I did it in the early morning, I was just looking at a snapshot of the anchor chart. But where it's come from is quite simple. We've had a huge push here from this candle, which started up here. Excuse me. And this current range, which we can see here, is contained inside of that. That makes these levels very attractive, you know, because they are what's called push points. It's going to push into them. Now, from there, once I've got that analysis and I can see where my levels and everything are, and the levels are all just failures and fibs. That's what they're for. Okay. Now, as you come down through the frames, you'll start seeing you've now got this move here. This is a fantastic move. Went into a range, came back down, and then it's gone into another range, but it is contained inside of this. What's happening with it? Well, the price is actually holding in the top section of it, right? Gives you more sentiment to the upper side. Take it down into the hour, and now you're at this range, okay? Now, what we saw was I wanted to get in and around here. I can see the range there. You know, there's a top section here, right the way through there, and the markets will oscillate from top to bottom. Well, it's working its way to the top. So the plan was to go from here, get out, maybe let it run as best as we can, and hopefully get to here. But it's actually topping out on this crescent and this one here. All right, and then come back down to stop me out. So if I'm going to go back to market, it's going to be here first. Why? Well, look to the left, cluster, cluster, and a stalling point here, because that's a form of an order block. Happy days. If it runs down, it would be this blue line here. Why is that? Same principle. It's the probing point. See, you see a probe point there, there, and then again where the tails have rattled. There's the key fib from the higher time frames. So that's very close, and it actually shows the compression between the two. Then it goes down to the next probing point, and bang, bang, bang. Look at the tails, and then down and down. So if you know how to mark these charts up, these become very, very powerful. And then all you have to do is just drop it into 15 minutes. There's an entry point, there's an exit point. Simple as that. Try and get it to run as far as you can. Case in point, you could enter here, get out here, take the bulk off, and then it runs off up to there. Simple stuff, guys. Simple stuff. So what's the moral? Don't be greedy. Just get in, do your stuff, get paid, walk away. Trading is genuinely that simple. The problem with it is most people just want big money and they want it fast, and the desire to trade far outweighs the reason to trade, and that's why you fail. I'll keep doing these to show consistency. Do drop in the comments what you'd like to see. I genuinely try to give you what you need. Down in the Scruffy squad is exactly how I trade. There's nigh on 50 modules of how I trade, because trust me, X does not mark the spot, and mechanical systems, contrary to belief, just don't work. If they did, there'd be no traders on the planet. Banks would just automate it. But they have flaws of traders. Think about that one. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.